Hello and welcome to this June 8th, 2010 video version of InvestEd Central's Chart of the Day. I'm Tom Bowley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are featuring dealer TRAK Holdings, Inc., ticker symbol TRAK. This is over a $600 million market cap company. Taking a look at the technicals, you can see the stock for the most part has just been trading sideways for the last 8 months, but there does seem to be a bias to the downside, and given the overall market conditions that we saw on Monday, especially on Friday, the turn lower, the move back getting close to very key support levels, the continuing move lower on Monday, this market appears to us to be setting up for continued weakness in the near term. So as a result, we're really concentrating our efforts in terms of the charts of the day and our setups to members on the short side of things. Now, if you take a look at the stock here, TRAK, T-R-A-K, came down in late March, early April, and put in a series of lows right at about the $17.10 area. Bounced off, went back up, got close to resistance, and then came back down and broke below the 1710 area and did so with increasing volume to the downside. Check out the moves to the upside. We went back up. We retested this 1710 area from underneath. We failed. We went back. We tested the recent low, which was down at about 15 and a quarter. We held with this hollow red candle. This is a reversing candle, and then we moved up off of it, came all the way back up, and you can see on an intraday basis it looked like we were going to break out on Monday above the mid-May highs, which were just above 1710, 1715. Actually, we printed a high on Monday of 1724, but notice we ended up with a shooting star candle off of this recent uptrend. This is a reversing type candle as well. So off of this uptrend with the reversing candle at price resistance and also closing almost right on its 50-day moving average, this would seem to be an area where we would see a pullback on TRAK, perhaps back down to about this 15 and a quarter level. Ultimately, we would expect that this support area would break, and that TRAK would fall beneath 15 and a quarter on a close, and that could eventually lead to at least a retest in the 14, 1410, 1415 area that was tested back in late February. To the upside, one of the reasons we like this chart is that it does minimize the risk. We're always looking for candidates that fit into our strategy of minimizing the risk versus the reward that we would expect to receive if in fact the call is correct. So to the upside, we've got very little risk, because if we close back over 1710 or so, especially if volume is heavy like it's been the last couple of days, then we would want to cover our position. But if it in fact, if the shooting star candle is in fact a reversing candle and we start to move lower and we move back to the 15 and a quarter area, then we've got probably about what's that, about $1.56, about 9% possible return on a short position to get back to the 15 and a quarter level, while we're only looking at maybe 2 to 3% risk if this particular candidate doesn't work out. So the risk reward strong. It's short. It's a short candidate, which kind of fits into our overall strategy, thinking that the market is going to go lower. So we think that it's a pretty solid risk managed trade. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestEdCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.